Good day, everybody. Jeffrey Beamer here with your Pro Trader tip of the day. Let's take a look at the chart. We have Alibaba today looking at a stock that is trading sideways. So you have a problem. Your stock dropped off a cliff and then all of a sudden it starts trading sideways. Can you make money from this type of move? You can see here the stock is trading right now at 72, about 72 half, but the stock has been chopping around since December. It's made some highs and lows, but here lately, since February, it's really been consolidating in about a $7 range. So, is there a way to make money off of a stock when it begins to have this behavior? And the answer is yes, and we're going to solve that for you right now. So, let's take a look at the trade ID for today. We have trade ID 1054. We're looking at Alibaba. This is in our service Delta Neutral Income over at ewotrader.com. We were in this trade for 11 days, and the strategy we used is a calendar spread. So let's take a look at how this ended up, and then I'll get into the details of how we did it. All right. So here we have Alibaba, and it was a great trade. All right. We have as we mentioned, we were in the trade for 11 days. We had over a 120% return on the trade in just 11 days. And since we base our trades on a hypothetical $10,000 trading account, the result was a little over $400. That is a 4% return on portfolio in just 4 days on a stock that went absolutely nowhere. All right. So let's take a look. So we sent out this alert on March 22nd. All right. And it was a calendar spread. And a calendar spread, if you're not familiar with this option strategy, is structured by buying a option that's out in time. It could be weeks or months or whatever, but selling something nearer term to help finance that. And we came up with the 73 call calendar spread. The long leg expires on April 26th, but the short leg expires April 12th. All right. Now, we put this trade on, and you can see here in what we call the risk graph, this kind of witch's hat. This is the modeling for a calendar spread. Now, we have very strict criteria on how we create these calendar spreads. They have to meet 4 out of 5 different criteria for us to put one of these on. And you can see that the light blue lines, which represent our break evens, the stock has consolidated within that for quite some time. So we look to put this on. The net debit was 41 cents per spread. So we did 8 of these, making our total risk $328. That's 3.2% risk on portfolio in total. So we look for what we're looking and what we're anticipating is the stock to continue to chop sideways. Well, let's advance here to today. When we took this trade off, we just sent out the alert a couple of hours ago in our service, and let's take a look at the result. Sure enough, the stock just bounced around within our trading range, and we were able to take some very nice profits. Now, you might look at this and say, wow, our max potential profit here was $1,100, but we took it off with a profit of only $400. There was a lot of money to be made here. Yes, but there was also a lot of risk. You see, when you start letting this get very close to expiration, there's a couple of Greeks that get into a battle with each other. One deals with the stock movement and the other deals with time. All right. So you have these two forces working against each other, and it gets a little risky. For example, if Alibaba were to gap down tomorrow, we would give up a lot of our profit. So there's no need to sit in there and continue to wait and wait and wait when we have very nice profits. In fact, over a 100% return on risk in just 11 days. And it was a good time to take this trade off. So if you have a stock that's stuck in a sideways range and it's something that you know and you look at on a regular basis, there are many viable option strategies. All right. And for this particular strategy, we chose the calendar spread. So that's your pro trader tip for today. We'll see you next time. Take care.